Well, thank you everyone for joining us again for our quarterly semiconductor call. We appreciate it. We've had a lot of fun doing these, Angus and I. I get to bounce ideas off of him and hear his feedback and his much greater intelligence than I in the space, and I just try to articulate it for you guys. I'm Nick Frasse, product manager, covering thematics as well as SMH and SMHX, our two semiconductor ETFs. I have Angus Shillington here who with me, who is the deputy PM on our emerging market team, but also covers a lot of the semiconductor names. So I figured we'd just get right into it. Nvidia had their most recent earnings call. Angus was blowing me up last night and this morning to go over all the different numbers and the excitement that he had. So first and foremost, let's just turn it to Angus. Why the incredible new conviction for the space and Nvidia?
Thanks, Nick, and welcome everyone. So you and I had briefly talked a couple of weeks ago that I had seen earnings estimates tighten up and had a feeling that we were going to say what we're going to say today, which, as you say, is pretty exciting. So if I think about our mind map, where we've come from, we'd put Nvidia on the bench maybe a year ago as it worked through some issues, preferring Broadcom. And really, our overall feeling was the group in SMH and SMHX were the right way to do this. You want to be diversified. Today, I'm officially going to pull Nvidia off the bench. If we're going to put this in basketball terms, put it back on the court. Broadcom has played fantastically well. It stays on the court, and the sum of those two kind of positions means that the rest, everything under the stack, is set up in a really, the stars are aligned. So I'm trying to stay away from explicit recommendations. Broadcom's outperformed Nvidia by about 50% over the past year. I think they now line up with similar kind of organizations. So that's point number one. Nvidia goes back on the court. Broadcom stays on the court. The remainder of the semi-cap stack stays on the court. I will move SMHX, the fabless semiconductor, to point guard, so shooting range. And I'm pulling off, in this analogy, just a bunch of consumer internet names, tired legs getting overrun by OpenAI. And as I say, I don't see this as explicit recommendations. I see this as a shift in conviction around the space, where Nvidia moves back up to playing position, and where there is always pain within a sector, is moving downstream. I think that sort of sums up where I feel right now. But I see it as a very big move, and it's difficult to overemphasize.
Cool. Yeah, I probably would have gone with a hockey reference, being a hockey player, but that's fine. We'll do basketball. No, for sure. I think, and as we look at these, we've made the argument for diversification over the last few calls. We're not making individual calls for SMH and SMHX. Obviously, these are passively managed, but as we look at the space and just determine, where the opportunities lie, Nvidia definitely, has had renewed vigor and definitely is intriguing again. As a quick recap of where we've been over the last couple calls and what we were thinking, maybe what moved a little bit faster: monetization of AI, that happened super quick. ChatGPT driving revenue as their enterprise. I think one of the big thing was the DeepSeek moment. Obviously, that's still in the lexicon for semiconductors today. Looking at maybe, optimization was the path forward and not compute laws and scaling, but that seemed to be not the case, right? They're moving together. Grok was a great example of that. If you keep throwing money at compute, these models will continue to get better. And that's what we're talking about with scaling laws, right? So I think that was a good, maybe a little bit we were thrown off by or just missed the timing of that a little bit. Divergence of customer strategy, that happened very quick, right? Hyperscalers developing their own TPUs quickly and A6 chips, whereas Nvidia was more of the generalized option. Geopolitical incentive structures, now China, TSMC, they're all kind of central. They're not peripheral. That's right in the frame of what we're looking at. That happened pretty quickly. And then OpenAI adoption versus the broader peer group of LLMs just took off. So those are kind of the things that we went over. Looking at kind of our current framework and what we think of the semi space moving forward, let's look at our thesis update. the foundational mental model about fabless diversification? How do we see that changing? Or has it changed at all, do you think?
In a word, it has changed. It's changed a lot quicker than I think we'd anticipated. And I feel like all of our past calls are out there, so we'll attach them to the show notes, and it's we're accountable to that track record. I think the simple answer is everything just moved a lot faster. We were concerned that this sort of ASICs move from the hyperscalers would sort of disrupt what Nvidia were doing, and that was sort of part of our problem. We also felt like the China thing sooner or later was gonna roll off in terms of US businesses having access to that massive market, and that's by and large happened. But I think, I think there's a lot to unpack in what you said, so probably better just to sort of go through it maybe point by point.
Sure. Okay, so expectations for Nvidia. I know maybe expand on this. Is Nvidia AI? Because that seems to be the narrative that's put in place.
Look, I think that's a really good point, and I think it doesn't believing that does not help investors, right? I think it was originally the key player, right? And I think if you think about it like a rail network, right? The original track that was going down was built by Nvidia, right? Since then, there is different options for track. And some people would prefer to run their own trains on their own track, and that's effectively what's happened. They've been building their own chips through Broadcom, and that was really the sort of dispersion between the Broadcom and Nvidia share price over the last year. The other really important point is like SMHX, and you've mentioned it a couple of times, is the fabless space. It's sort of off the radar names that design, invent, innovate. I think that's sort of the way to think about it. So if you sort of step back and say, okay, we're feeling good about the top of the stack, right? The kind of monopoly guys. And then as you go down the stack, if they're doing well, then the semi-cap equipment guys will do well. The software guys will do well. And as the new applications roll out, and I think one of the best ways to think about this is power management. So that's sort of the way to think about it. So, there are stages. Stage one was the original infrastructure. Stage two was building models. Stage three was implementation. And now you're finding the applications are just atomizing from that level.
Sure. It's a whole ecosystem, right? And the rails are down. The entire ecosystem is moving in that direction. Okay, so we go back to ASICs chips and the spending from these hyperscalers, I guess. Is AI spending maintaining? Is it shifting? What is the thought there from like a customer perspective for these semi names?
It's going up and it's not stopping, right? So the way I would think about it, and just to really an arresting point. So if you think that I'm using projections, I'm coming in higher, $300 to $400 billion, $300 to $400 billion of capex that we can see, right? So if you think that sort of the Microsoft and the Meta's just reported, they increased their capex projections. The sum of the number that we can see is in the $300 to $400 billion for this year alone. Now, if you think about what the increase of US GDP will be this year at a sort of 2% to 3% growth, that 300 to 400 billion represents about half of GDP growth this year in the United States. These are vast numbers. And as I say, it is not slowing down. In fact, it's increasing. And there are a bunch of reasons for that. And maybe we can step through that as we go along.
So, I think the natural question would be, is it a bubble?
Let's unpack what Jensen said in the NVIDIA call. And the reason why I sort of feel like in the mind map I have is it's better positioned. So one, we got that incredible news about sovereign AI in the Middle East, right? So what that ends up doing is taking out demand a year out. So if you take out demand a year out, anyone who is thinking they would smooth it, who needs it now, is going to pull in their demand. So that's point number one. We're introducing more and more new demand at the bottom, which is putting pressure on, the guys who have existing capex plans. Two, by its very nature, right, it's a compounding phenomena, right? So if you already have it in the ground, you want to continue to upgrade and you want to continue to upgrade and scale. you have built use cases. Now, if you look at Microsoft, they told you that their token usage year on year was 5x, like 5x. So think that through. Now, that's shorthand for OpenAI, but broadly speaking, token usage is doubling every 6 to 8 months, right? That's a phenomenal number. Now, compute demand is not a one-to-one correlation, but in reality, it sort of ends up being targeted that way because the more complex applications begin to be rolled out because of discovery and just how effective these models are at anticipating and predicting, then that token usage will, and the sort of need by more complex models will mean that the demand is there. These guys have proven they are anti-fragile, right? So when things get tough, they gain market share. However, we haven't tested them when things get tough, what their response will be. I would anticipate there is no question, right? They will have to spend to defend. So as the OpenAI ramps, and we've seen them just hire a monetization team to build an ad layer, really super competent people. They're going to start to run into the competition. And if the competition feels this, they're going to have to up their game in terms of innovation. That will mean CapEx. So the whole thing, no, it is not a bubble. Every time there's a shakeout in the market and multiples get compressed, the Cisco chart reappears. I do not believe that in any way helps investors.
You took the words out of my mouth. I was going to say, as a recap, this isn't Cisco, right? I think the just the technology that is AI is lending itself to what seems like infinite CapEx for compute, right? The more compute, the better, because either A, your models get better, or B, like you said, the competition has to keep up with, to stay ahead. So that's one. And then if you look at, and maybe some people aren't as familiar with token usage, but that's essentially the input words that you put into these LLMs, right? That's a very dumbed down version of it, but that's essentially what it is. The adoption rate
Yeah.
of AI is still relatively low in regards to just entire user base of maybe internet users. So think about how much token usage there is now, what compute is needed just for what we have currently, and then start layering on applications, start layering on into increased adoption. The token the token usage is probably going to, even though it seems like it's hockey sticked already, it's going to continue to hockey stick and J curve. So
Yeah, I
just
mean, I think
something.
just on that, this thing is growing in multiple dimensions, and I think first of all, you need to unshackle yourself from this belief that AI is Nvidia, because that's what sort of gets you into a hole when you see the Cisco chart. AI is very, very broad, right? That's point number one. So the point number two is the cumulative nature of adoption, right? So more adoption equals more tokens, but more adoptions equals more data equals better models. Better models mean more applications. So it's spreading in many directions.
Okay. All right. Well, let's pivot a little bit. Geopolitics, that's a big question for everybody, especially in the semiconductor space, tariffs and all of those different things. But they just announced sovereign AI, Saudi Arabia investment, et cetera. What does that mean, for the semi space as a whole? I know Nvidia was kind of at the front of that conversation, but just maybe if you can hum a few bars on the sovereign AI.
That's always sort of been on the back burner. I think the lead into that was the sort of end of Biden diffusion laws. That, to me, that was super dangerous, right? Because if you choose who is allowed to build AI and who is not about to build AI, and if you think about how the first internet iteration rolled out, it was basically the world, and then there was sort of walled off China. I had felt that the sort of danger was we were going to build a walled off US, and then the rest of the world was probably going to cluster around China. Now we've moved away from that, and this idea of building out, with friends in the Middle East has created, I think, what the pivot I've sort of felt in Nvidia. So you've got that huge piece. Now you at the same time, Nvidia has been shut out of China. Now there's a lot of talk about maybe they'll get back in, maybe they'll not. I think that's drama. And the reason I think that, which is not sort of generally kind of agreed with, is I don't think Mr. Xi wants Chinese AI built on any US architecture or software. So, at the end of the day, DeepSeek was an output of constraining China. They are building, developing very quickly. I think it's unlikely that there'll be a material reentry in any form, which I think actually at the end of the day removes or brings down the risk that was embedded in Nvidia. But I think geopolitics, tariffs, not sure. I don't think there's a material issue, but definitely sovereign AI is huge, and taking China out as a sort of question mark is probably reduces risk overall.
Slight tangent, and we didn't go over this in the call prep, but it came to me as we were talking. With the rate at which AI is growing and getting better, they've obviously been able to optimize with things like DeepSeek. Does that put them on the back foot if they don't have leading edge technology like we have? Because we have ASML, we have TSMC. Even if they say they want to develop their own chips, do they have that? Can they optimize for that?
It's difficult to say what ahead means, but and the easy answer is I don't think it constrains them.
So let's move on. Architecture, we talked about ASICs chips a little bit. If you just want to, talk a little bit about NVIDIA, their parallel processing of GPUs was huge, right? It was perfect for what AI was doing. Now we've moved on to kind of this next phase. How do you kind of parse that out from being a general player or a general option to the specialized chips?
Yeah, I mean, there's a couple of issues here. So Nvidia had originally said, we're going to do general purpose GPUs. You're going to take them, and that's it. They're now sort of pulled back from that, and they are building, inference overlays that are slightly cheaper. I don't think that changes the trend because, if you're Amazon and your objective, like it has been in any part of your business, is to get costs down as low as possible. Think delivery infrastructure, that kind of stuff. They've got Trainium 2 output costs to, their cost per user is down about 40% in the last year, and with 50% less power. So most of the hyperscale customers want their own solutions because they're operating their own business models, and they want to be able to customize to scale, and they want to do that at a lower cost, and they want to extract the CUDA software architecture out and sort of build on top of their own architecture. So I think bringing in the big sovereign piece does backfill in Nvidia, but it does not change this trend, which is sort of driving Broadcom, which is like designing your own custom silicon. If you're Meta or Amazon or Microsoft, is inevitable. However, at a foundational layer, you build a new data center in your Microsoft, you will use Nvidia GPUs. So what I'm saying is that the thing is just the demand on silicon is just exploding, and I think that's really the point. And I was sort of thinking about this on my way into work in the car today. We cannot help being very promotional in this. This was never the intention of these videos. We set out to be informational, right? But I think, broadly speaking, we built these ETFs over several years, but they are designed for purpose for exactly where we are right now. So SMHX is the top of the stack is Nvidia, Broadcom, and this thing just cascades down from there to semi-cap equipment software. They are the sort of, they're the monopolies on monopolies on monopolies. Now, as we sort of roll into this next phase, SMHX sort of broadens, but so it's very difficult to actually express how we feel or I feel about the outlook without sounding promotional. So I do apologize for that, but it really is not intentional. We're trying to be informational, so let's sort of leave it there.
No, we appreciate it. I think we'll touch on that and the winners of the winners in the ecosystem and why SMHX. But quickly touch on, I mean, obviously a big topic of conversation right now is, the potential of a recession here in the United States. Does that derail AI? What does that mean for CapEx? All of those different things. I guess if you could just tie a bow on that quickly, because I think I know your opinion on it. But
I
maybe,
think if you get market volatility, multiples will be all over the place, right? And the Cisco chart will show up, and people will panic. And we're trying. Part of this is to actually partner up with our sort of advisor partners to say, look, you should not be panicking during these situations. These businesses, this entire space theme is growing. So the intrinsic value, if the businesses are delivering as we expect, the intrinsic value of the companies in the ETFs or the companies in the that you pick a single stock should increase over time. Now, here's a question. Now, what if things get tight? What if we go into a recession? One, rates will probably come down, meaning you can leverage for cheaper and debt stacks get cheaper, and for the guys who are borrowing to build. But most importantly, like especially with open AI, you can't stop building. You just can't, because one, the anti-fragile point I made earlier on, they've tended to get stronger in times of economic turbulence. There's no reason that would change. But then you throw into the mix that there's this massive competitor. I mean, OpenAI is no longer tinkering with chatbots. I think that's a point to really throw out. They are building a revenue juggernaut now. At consumer AI, at consumer internet level, people sort of think like Amazon makes its money from e-commerce, or that's not the case. These are lost leaders, right? In order to bring in a large community, right, that you can then sell advertising to. So advertising becomes the front line of competition. Now, the more they compete, the more they're going to have to invest. And this filters back up to this whole stack of GPUs and semis and semi-cap and innovation around power management and delivery at cost and delivery at scale.
So semis, if you see a recession, it's a share price problem. It's not a structural foundational problem to the sector as a whole. I think we've been kind of shouting that from the mountaintops that we're less and less cyclical as time goes on. So let's go back to the ecosystem of winners, the monopolies on monopolies on monopolies. We'll start with SMH if you have one of those, or SMHX. But what are some names inside of there that we could, really look at that maybe people don't have as good of a lens on, that really exemplify that diversified exposure and futuristic outlook?
Power is the key primitive to pretty much everything here. So, power plus cooling is probably 15% of cost of goods sold of a data center, right? So if you are, UAE and you can put in power for 50% lower, you immediately end up with a 5 to 6 to 7% better operating margin. So you can then deliver your tokens, radically cheaper than anybody else. So here's your problem: is one, if you're short of power will spike, and that puts you in a competitive disadvantage. If, on the other hand, you have a friend who has a fabless semiconductor business who is able to give you a solution to get your power usage down 40%, you are immediately in a far better position. The same case is true for, I don't know, I'm just trying to sort of randomly pick a name. Astera Labs inside SMHX. These guys do specialized connectivity trips. So basically, they eliminate data bottlenecks. So if you don't have enough GPUs, or you don't have enough switches, or they're not working perfectly, these guys package and compress data so it flows quicker. So what we're moving on to is this stage now where the demand for applications within your technology stack can be optimized by using other semiconductors and other AI solutions based on silicon that will make the whole thing move quicker. So there are always going to be constraints. There are constraints at the top. Now that you've loaded all the stuff that's coming in the Middle East, you probably don't have the fab capability. Now the fab guys are going to start to invest more. That's ASML moves down the stack into Synopsys, or those kind of guys. And then within the stack of technology you've also already put out in your data center, you're having to optimize for data bottlenecks, for power bottlenecks. There's just a constant demand for efficiency. And efficiency, like we said, like you touch anything with silicon, it becomes more efficient. And I think that's really the way to think about it.
And I think it's important to note that it's like Astera is one example of that, right? There are 22 names inside of that portfolio that are doing something similar in a different part of the stack, right? In a different part of that working group. So it's important to understand that this isn't just, SMHX is not just looking for the next Nvidia, right? There very well might be the next Nvidia in there, which might be Broadcom or Qual, whoever it might be, but there are an entire group of holdings inside of that are doing different things within the semiconductor space, designing different chips that are making things more efficient, that are making things faster, that are making things better, and that are driving AI forward. And that's why it's, I think we've been doing a pretty good job, but I think this is the time to really hammer home like the differentiation there, because where SMH is a literally a team of winners of the entire ecosystem, these are the guys that are making the ecosystem efficient in every way possible across every part of the data center. And not just data center, right? Across the board for every different industry that uses silicon. So I think I fully agree. Okay, close your eyes. I need you to imagine what the next 12 to 18 months of semiconductors look like. And I would imagine it's probably faster than whatever you could come up with, but we'll see. We'll see what you think.
Yeah, I mean, I think we've sort of hit it, right? You've already answered. Look, I mean, we had that. I don't know. Everybody should watch that Johnny Ive
Oh,
video that OpenAI posted. Now, people think it was idiotic or it was annoying, or I saw it as a very confident, like, declaration of war. Right? It may have been a recruitment drive. It may have been like a call for capital. The reality is the competition has arrived, and at that level, it is extremely broad. I think that's the thing to really watch out for here. You know, Elon is activated. This guy is tilted. And I don't think he's tilted because he's sort of upset with the way that OpenAI has worked. I think he sees the runway. Right, it's like a boulevard of green lights right now. So I think that's the big surprise. But you know, as we said, the competition ramps. You are forced, if you're Google or really anyone in that consumer facing stack, you're forced to invest more, right? To innovate more. So I think I think the jump, and this isn't a conversation about consumer internet, but I think you've got to go to the customers to find out what's going to happen upstream to the guys who are designing, and then the guys who are building, and then the guys who are building the equipment to build, and then the software to build the equipment to build, and upstream of the consumer guys. It's the next year I think is more positive than I would dare to believe, and maybe it's less positive for the downstream. I don't know. It's what we've tended to do with this thing is we wanted to throw out some crazy ideas that we believe in. And the thing is,
they look
where we've
conservative.
been most wrong is we've got the timeline wrong. They've happened, but they've happened almost immediately. So I don't think you can underestimate the sort of the build. I don't think you
Yeah,
underestimate the build.
I would say, as the kids say today, the video is a little cringe, but I get what they were doing, and I understand, and I do think, and we talked about this, moving into the consumer space with something like this, it absolutely is a declaration of war, right? They are coming for everybody, and that's what they're saying. Any last thoughts before I go over our key takeaways? Anything that I didn't touch on that you wanted to go over, as far as outlook, thoughts?
No, I would no is the answer. I think we covered everything. My feeling is like everybody's out there trying to pick winners. And I know it feels good to pick a winner, and you can tell your friends about it. My feeling is always, in the way that throughout my career I've always operated, is like, look for losers, get them out of your portfolio, and the winners will find you, right? And I don't know what the winners will be in terms of share price performance over time, but I think given the reality that both the ETFs optimize to quasi monopolies, the winners will find you, and it will be pretty rewarding. It's difficult to say exactly where that's going to be, and I think that's just a function of the fact that this thing is moving so fast. It's very, very difficult to get ahead of it in terms of mind mapping at a micro level.
Own the basket. Own the basket. Okay, key takeaways. Nvidia continues to be in focus. They're back in the starting lineup. Not that we picked them, we're passive, but as far as our mental model goes, they're not on the bench anymore. Token growth, scaling 2x every 6 months, something like that. That's probably a slow estimation, but token going up. Compute needs to keep up. CapEx needs to be spent to get it there. OpenAI is a disruptor. And I apologize, I'm going through my list quick here, but CapEx forecast still too conservative. Streets behind the curve. We were behind the curve. We didn't we didn't know how fast it was going to go. Maybe we're staying slightly ahead because we're overly optimistic because we don't have anything tied to us and we can do that. But it definitely probably too conservative for CapEx spend. We're not in a bubble. Um, Bullish on SMH. CapEx cascades throughout the entire semi stack. SMHX just getting started. Probably the rookie, maybe the MVP. 12 to 18 months. We don't know. If you're looking at if we're sticking with the analogy of basketball teams or hockey teams, um, and the story of AI and semis continues to accelerate. Right, they are inextricably linked. If you believe in AI as a technology, the most pure way to play it is through semiconductors. And I think that's full stop. SMH, SMHX are the leaders in the space. And I think the way that the indexes are constructed has proven that to be the case. So, and we don't think that the AI train is stopping. The rails are down, and everybody's going to hop on.
The last piece, that was a great summary, is like you can expect these share prices to be volatile, right? This is a
Yeah.
high beta
Yes.
sector. But I think you can more and more, you should not expect uh, the business shareholder return generation to be volatile. I think that becomes less volatile. So you can have more anticipation and the ability to buy into dislocations.
Absolutely. All right. Well, everyone, thank you again for joining us. We would love to get comments, questions. We will try to put as many links in the notes as possible for everyone. But again, reach out if you have any questions. Feel free to give us comments and feedback. We always are open to it. And if we don't talk to you, we'll see you next quarter.